In addition to the general deduction provision of Section 8-1, we also have Section 8-5, which sets out provisions for deductibility of amounts that another provision of the Act, excluding Division 8, allows you to deduct. This is subject to provisions in the Act that prevent or limit an amount being deducted. Any amount that is deducted under another provision pursuant to Section 8-5 is called a specific deduction. Under Section 8-10, there are no double deductions, meaning you can only deduct under the provision that is most appropriate. This is usually taken to mean the specific provision. There are a number of major provisions that relate to specific deductions. Division 25 contains a number of small provisions. For example, repairs of a non-capital nature, which mirrors Section 8-1. Lease establishment costs or borrowing costs, which are associated with capital expenditure, and some costs that are not directly related to earning assessable income, such as tax compliance costs. Division 28 sets out the provisions for specific deductions for cars and individuals, and provides the methods available for calculation of the deduction amount. To encourage charitable giving, Division 30 allows for gifts and donations to be deducted. The key points to remember for Division 30 are that the recipient of the gift must be endorsed by the Commissioner as a deductible gift recipient. For example, a registered charity. Section 30-15 provides a table of gifts or contributions that can be deducted. A key thing to remember here is that the gift amount must have a value of $2 or more with no material benefit received in return. There are also a number of requirements that relate to gifts of property, trading stock or shares, and how the value of the deduction should be calculated. Division 36 covers the deductibility of prior year tax losses. Deduction for a current year tax loss is covered in Section 36-10 and is calculated using the current year surplus deductions less net exempt income. The rules for applying tax loss as a deduction in a future year are covered in Section 36-15. The requirements are that you apply current year deductions first, then apply carry forward tax losses in the order made, but you apply carry forward tax loss only after reducing the loss by any net exempt income from the current year. Note that there are special rules for companies where companies can choose to deduct a lesser amount of a tax loss in order to avoid excess franking credits. Notwithstanding eligibility under a general or specific deduction provision, another specific provision may limit or deny that deduction. Division 26 sets out a number of amounts that you cannot deduct or you cannot deduct in full. For example, fines or penalties for breaches of a law are excluded entirely in Section 26-5. Payments to related entities are reduced to what is deemed to be a reasonable amount by the Commissioner under Section 26-35. Accrued employee leave entitlements are deferred until the year in which they are actually paid by Section 26-10. Division 32 specifically excludes entertainment expenses from being deductible. This means that provision of food, drink or recreation may be entertainment depending on the context, such that entertainment may be provided even if business discussions occur, for example, an off-premises business lunch. We need to note that costs associated with overnight business travel restaurant meals are not considered entertainment under Section 32-10. Key things to consider when looking at whether an expense is entertainment include: is it provided off-site, out of working hours? Is it elaborate as opposed to mere sustenance? And does it have a social purpose? There are some exceptions to be aware of. For example, provision of a fringe benefit per Section 32-20, and a table of exceptions is provided in Subdivision 32B. You should also be aware of the exceptions and limitations to deductibility relating to non-commercial business losses, thin capitalisation, and prepayments for services, which are covered in more detail in separate clips. To recap, Section 8-5 refers to specific deductions which are provided for in other provisions in income tax legislation. There are a number of divisions relating to specific deductions that you need to be aware of, and you need to ensure that in accordance with Section 8-10, you do not double deduct. You also need to be aware of the specific exclusions and limitations as set out in the Act.